Hello guys, welcome to today's video where I'm going to answer the question how to do swing trading. So for those of you who do not know what swing trading is, this is basically a bit of some long-term trading. So you have a bigger target, something like 200 pips, 300 pips, up to even 1,000 pips. Okay, so you are looking to enter a trade and hold it for something like 3 days, 5 days, up to even 8 days. Okay, so usually swing trading I do it on the 1 hour chart. So let me start the presentation and show you what we have. Okay, so the steps for you to do swing trading is, the first thing that you need to do is to use the 1 hour for trend analysis. So you have to see the 1 hour trend on the 1 hour chart. Okay, so we are trading swinging from the 1 hour. So you have to identify your peaks and level 1 peaks, which are safety trades. Okay, so after you identify that you have a clear 1 hour trend market maker cycle, you will then enter the trade on a lower time frame, following all the rules of the 15-minute entry on the daily cycle. So you are only taking trades at peaks and level 1, which is away from peak. Okay, so what I simply mean by this is that this is our peak. Okay, so we are looking to enter our first trade in somewhere around in, then after a drop, this is a second swing. So this will be the only swing trade that you can take and then pull off forward for 3 levels. This won't be a swing trade from level 3, from level 2 into level 3. It's only level peak level 1 into level 2. From level 2 to level 3 is not swing. You are now looking for another what swing going the other direction. So let me explain that on the next chart. Okay, so this happened to be your benchmark. This is your benchmark, so this is where you should start. You should start by studying the 1 hour chart. Okay, so now you look for the 1 hour market maker trend cycle, which is 3 levels up, and then you anticipate for the peak. You look for a pattern in here. If you did not resist get a pattern in here, you wait for 1 times ADR, and then you wait for the 15-minute pattern. So you want this pattern to show at this present time. So this pattern had to show in here. So for me to enter this trade, I should have seen something like this. Okay, consolidation, accumulation, then an M what formation. Okay, this is what I'm expecting. Then we have 3 levels down. Okay, 1, 2, 3. So after this, in a, which happens to be this, the 15-minute pattern. If you don't know about the 15-minute pattern, I did a video which is called the daily cycle. I explained this pattern very well, and I also did another video using Heiken and Ashi candles, so you can learn how to combine those. Okay, so this is what our benchmark. So let's look at a live chart and see the other trade that I took on pound USD. Okay, so for me in here, as you can see, we have a peak. This is a peak. Okay, this is a peak. So of this peak, I'm expecting 3 days of drop. Okay, 1, 2, 3 days of drop. Okay, in here. So from here, I want to see most probably 3 levels. 3 levels. The first level was in here, price dropped into the second level. Is now speaking, we are in what? In level 3. Okay, so this is how I want to see my levels. I want to see drop, pull back, level 1, drop, pull back, level 2, drop into level 3. So after this spike, I know that I'm in level 3. I had 3 days of drop with 3 levels. This was aggressive. Okay, so 3 days of drop, 3 levels. I have heard about this somewhere. This is called the 3-day cycle. So I'm waiting for price to hit the low. Okay, so this is day 1 at the low, day 2, day 3. So going into tomorrow, which is day 4, I'm expecting what price to make a stop and in a and then pull, so that I will pull the trigger and enter the swing trade on the 15-minute time frame. Okay, after entering the swing trade on the 15-minute time frame, I'm going to put my stop loss on the 15-minute time frame and then target 3 times ADR, which is close to this high. Okay, so this is what my TP in. Okay, so if the ADR is 100, I'm typically looking for 3 times ADR, which is what, 300. So if my stop loss is at 30 pips, sometimes for swing, it can for you to be safe, your stop has to be a bit bigger. It gets 30 is a 1 is to what, is to 10 risk to reward. So I'm risking 1 grand to make 10 in here. It's a good deal off on the course of 3 days. It's a good deal. So let's go and watch how will this pattern play out. So tomorrow I'm looking for a stop hunt below the Asian box and I'm waiting to buy price so that I can pull off from this level a repeat of the low, or he might do what, straight away. What I want is for him to repeat the low and make a W formation and give me all the confirmations I need so that I can enter what, the swing trade. Okay, so in here, looking at the next day, we have a tight Asian range and a false move below what, the 800, and it happened to be at yesterday's low. Okay, price pulled off, repeat the low with a hammer. You can enter on the green hammer. It's an aggressive entry than waiting to enter after the close of the 13. If you entered after the close of the 13, your stop loss was uh 26 pips in here. Okay, if you entered at the hammer, the stop loss was 10, so it means that you can gain. So if you could have entered this and exited on this day, but now we're talking of swing trading, we're using the 1 hour and entering on the 15-minute chart to hold the trade. So after entering the trade, the stop loss goes in position. I'm targeting 3 times ADR, or after I see 3 levels, I take what, and exit. Okay, so this is how everything went up. So we ended in here with our stop loss tight. So after 3 levels, okay, we need to exit. Okay, level 1 is clear. In here we have something like a level, and this was level 3. Okay, so I have 1, 2, 3 days of rise. Price needs to pull back after 3 days of rise. This happened to be Friday. Okay, so after Friday you cut off your position. We ended up with something like 150 pips. So you'd have got a 1 is to 5 on the 26 stop loss and a 1 is to 15 pips on the 1 is to 15 risk reward on the 10 pip stop loss. So the tighter the stop loss, the bigger the risk reward, but the riskier the trade is. So you wanna do your calculations well. If you nail the stuff and you do your homework, you'll see it's easy to see this. Okay, so now looking at this, I'm looking at another opportunity for a swing trade in here. Okay, so we had peak formation low, level 1, level 2 into level 3, day 1 of rise, day 2, day 3. Okay, so I want to look for a pattern on the M formation on this day so that price can give me the other move going the other direction. Okay, so let's jump to the 15-minute chart and see what we will be having. We set the high in here yesterday. Okay, price trades off the high, a repeat of the high early. The range is 39 pips. The high is repeated, but TDI is already on its way down. Okay, so when price closed below in here, RSI is below the market baseline, below the RSI the red signal line, and we have a type 2M formation with an aggressive move failing to reach yesterday's high. Okay, so this is our M. Peg below, peg above, peg below, short. You set your stop loss, you wait for the run, count in 3 levels, and you take an exit. Okay, so we ended our trade in here. Let's not consider this weekend. So you are not supposed to trade over the weekend. Okay, so this happened to be a pull of a Monday, price dropped. This is a type of trade 1 hour 50-50 bounce. When price, I will talk about the 1 hour 50-50 bounce in another video. So make sure guys you like the video, subscribe and comment for me to do the other videos. Okay, the videos are done by public demand, so make sure you just leave a comment and write down. So from here we need to drop 3 levels. After a drop of 3 levels, I'll take what? An exit. Okay, so level 1 in here, this I would say my level 2, and this was a level 3. This is a peak going into what? Friday, Monday. So this you would have been smoked in with this Monday, Tuesday, Wednesday, Thursday, Friday. I take off my position before what? The day closes of the low. Okay, so 3 levels of drop. We are looking for what? For a repeat in here, then bam. So this is basically the trick of swing trading. So you are just looking at the 1 hour chart and see where the next cycle can be formed and how can it be formed. So now we are looking at an out cycle or a reset going the other way. So this is the trick of the using the 1 hour chart to analyze, starting from the benchmark in a understanding this cycle shows over on the 1 hour chart over the course of the week. You will be able to nail the stuff guys. Okay, so thank you for watching, thank you for supporting. Make sure you like, subscribe and comment. Okay.